Here is the question keeping Forex traders glued to their screens this Tuesday morning, the 21st of July, 2026. Can the US dollar finally push through the 1.4100 barrier against the Canadian dollar, or is this rally already running out of steam? As of today, the US dollar to Canadian dollar pair has been staging an intraday recovery, but that upside momentum has stalled right at one of the most technically significant levels on the chart. The 1.4100 zone is not simply a round number. It represents a powerful confluence of resistance factors, overlapping technical signals that converge at a single price point, making it exceptionally difficult for bulls to power through. Right now, the market is holding its breath at precisely this level. So what has been fueling this push higher in recent sessions? The US dollar has gathered modest support as broader global risk sentiment has tilted cautious, driving some safe haven demand toward the greenback. At the same time, the Canadian dollar, the loonie, has faced headwinds from volatile crude oil prices. Canada is a major oil exporter, and when oil market confidence wavers, the loonie tends to weaken, which mechanically pushes US dollar to Canadian dollar higher. That combination has provided the fuel for today's intraday recovery. However, the pair now finds itself pressed against a ceiling that has repelled price on multiple prior occasions, and buyers are becoming increasingly hesitant the closer price edges toward 1.4100. Let us be precise about what makes 1.4100 so significant technically. A confluence hurdle in Forex analysis is a price zone where multiple independent forms of resistance align simultaneously: horizontal supply levels, key moving averages, or Fibonacci retracement values, all pointing to the same area. When these signals converge, the resistance becomes far more robust than any single indicator alone could create. For US dollar to Canadian dollar today, the 1.4100 area combines horizontal resistance from prior highs with overlapping moving average pressure, creating a formidable barrier. Sellers are actively defending this zone, and buyers are not committing with sufficient conviction to overwhelm them. Until the pair achieves a clear, sustained break and daily close above 1.4100, the bullish case remains technically unconfirmed. This standoff at 1.4100 is not merely an abstract technical exercise, it carries tangible consequences. Canadian businesses importing American goods are watching this level closely, because a sustained break higher means their costs rise directly. Conversely, US exporters into Canada become more competitive if the dollar strengthens further. Short-term currency traders and carry trade desks are also recalibrating positions around this zone, knowing that the risk-reward calculation changes sharply at a confluence level. Institutional participants will be particularly alert to any macro catalyst, whether a US economic data surprise or a shift in Canadian employment figures, that could tip the balance decisively in either direction. This is a level where patience matters more than speed. Looking ahead from today, July 21, 2026, the near-term direction for US dollar to Canadian dollar hinges entirely on how price resolves around the 1.4100 mark. Scenario 1, the pair achieves a convincing break and hold above this confluence barrier. In that case, bullish momentum could accelerate toward higher supply zones, emboldening dollar buyers to extend gains. Scenario 2, which current intraday price action makes look equally plausible, is a rejection at 1.4100 that drags the pair back toward support below the 1.4000 psychological level. The asymmetry here is important. A clean breakout signals strength, a failure at this level signals exhaustion. Traders should define their entry and exit criteria now, before the market makes its move. Here is the clear takeaway from today's analysis: the US dollar to Canadian dollar recovery is real, but it remains fragile. The 1.4100 confluence hurdle is the decisive line in the sand on Tuesday, July 21, 2026. Bulls need a convincing close above it to validate the upside case and attract fresh momentum buying. A failure here keeps bears firmly in control and opens the door to a pullback. In Forex trading, knowing exactly where your thesis is wrong is just as valuable as knowing where you might be right, and today, 1.4100 is that critical threshold. If this breakdown helped clarify the picture for you, subscribe to the channel for daily, data-driven Forex analysis in plain British English. The market will not wait, and neither should you.